This is your LMAX Exchange technical update for Monday, August 7th, 2017. Eurodollar. So the euro has finally reversed course a little bit after putting in a 2017 high last week at 119.11. That was a plus 2.5-year high as well, with the market breaking up above 117.10, which was a previous range resistance going back to 2015, opening the door for what could be a potential longer-term structural shift. But again, with shorter-term technical studies looking quite stretched and the market trading up quite a bit into overbought territory, the market had stalled out at 119.11 in favor of a short-term correction, which could now see additional declines in the sessions ahead to allow for some shorter-term overbought studies to unwind and for the market to put in that next higher low ahead of what could still be a bullish resumption. From here, there's risk and scope for additional declines down towards the 116 area, with the market then potentially seen all the way back down towards the 113 to 114 area before that higher low is sought out and the market considers a bullish resumption. Sterling dollar. So cable has pulled back from its own 2017 high at 132.68 in the previous week. The market now is showing signs of a reversal that could open the door for additional declines in the sessions ahead, potentially back down towards some key support which comes in around the 28 to 127 area. Only setbacks that extend back below support going back to the June 21st at 25.90 would compromise what is a broader, more constructive outlook for this market now following the breakout in April above a critical range resistance at 127.75. So again, there's risk for additional setbacks over the coming sessions, but the market should find support somewhere around the 128 area in favor of that next major upside extension towards 135. Dollar yen. So dollar yen has been confined to mostly some range trade over the past several weeks and months, with the market most recently stalling out above that range resistance in the 114 to 115 area and opening the door for this latest round of pullbacks that could still extend lower towards the 2017 low, which comes in just shy of 108. At this point, it would take a clear break back above 114.50 to potentially compromise what has been a range trade in this market. Euro Swiss. So Euro Swiss has traded up into some significantly overbought territory in recent days, the market trading up to its highest levels since January of 2015 when we saw a collapse, trading up to a 2017 high at 115.40 about ahead of this latest minor pullback. A bearish outside day formation that we had seen on Friday could set the stage now for what is a necessary healthy corrective pullback in this market to allow for overbought studies to unwind. The market is at risk for a pullback potentially towards that previous breakout point at 112, resistance now turned support. Aussie Dollar. So Aussie Dollar has been showing signs of topping out since putting in its own plus 2-year high, 2017 high the other week at 80.66. There is risk that we see additional setbacks in this market over the coming sessions. A clear break below some support, which comes in around 78.75, would strengthen this outlook and open the door for an acceleration of declines. Dollar CAD. So dollar CAD has recently put in a plus 2-year low of its own, trading down to 24.14 after breaking below 24.60. The market is showing signs of turning back up now after the market had stalled out ahead of 24, and there is room for additional corrective upside after we'd seen some extreme oversold readings and a plus 10 big figure move from the May high all the way up just shy of 138. Right now, look for the possibility of these gains to extend, this correction to extend back towards the 130 area, with only a break back above that level now to really potentially suggest that the market's looking to put in a resumption of what could be a longer-term uptrend. But right now, the breakdown that we've seen over the past several weeks does suggest the market is pressured to the downside, and this upside we're seeing is only corrective in favor of what could be a lower top. Again, on a short-term basis, though, the breakup that we've seen over the past few sessions does suggest that we could see a little bit more corrective upside price action towards 130. Kiwi dollar. So the New Zealand dollar is stalled out by a plus 2-year high of its own above 75. The market has run into this critical resistance area up around 75, but has since pulled back. There is room for additional declines in this market, corrective declines down towards the 72 to 73 area over the coming sessions, but we would need to see a close below 74 on a daily basis to accelerate those declines and officially take the pressure off the top side. SPX 500. The S&P 500 has been consolidating after testing a critical measured move upside extension at 2480. That's a fresh record high that we'd seen the other week above 2480, and that upside extension follows an 80-point consolidation earlier this year between 2400 and 2320. The break above 2400 earlier this year projected an 80-point measured move extension to 2480, and that's where we've been consolidating. There is risk now that this extension has been tested for some form of a pullback, but at a minimum, we need to see a break and close back below 2458 to strengthen the possibility of that outlook. Gold. So gold is a market that has been chopping around over the past several months, but dips have been very well supported, most recently ahead of 1200, with the market slowly putting in some higher highs. A fresh 2017 high was put in at 1296 back in the month of June, and it looks like the market could be poised for an extension beyond that 1296 high, which would expose a test of the 2016 peak at 1375 further up. If we do see setbacks over the coming sessions, look for those setbacks to be very well supported again ahead of 1200, ideally in the 1230 area in favor of a higher low above that low that we had seen back on the 10th of July, which was at around 1205, and in favor of a bullish resumption back towards and above 1296.